What is going on, everyone? Welcome to the channel and welcome to this episode. We're going to be talking about some really important things, especially how to trade like a bank. By the end of this episode, you know exactly how to trade like a bank. But very welcome to the live. How is everyone? Good to see you all here. We'll give it a couple of minutes before everyone jumps in. Where's everybody tuning in from? Yeah, so we'll give it a few minutes and we're going to dive into exactly how you can trade like a bank. You should be able to see Aussie dollar on my chart. Let me know you can see that. Welcome, welcome, welcome. South Africa, nice. Welcome. Well, first and foremost, how you trade like a bank is go work for a bank, because you're not going to be doing that on TradingView. I can assure you this, and you're not going to have the same volume. Anyone that tells you that they can trade like a bank likely has nothing in their bank, and that is just the cold, hard truth. You've been misled and you've been fooled, and the show is over. It's been gone on for too long now, and the reality is, and I'm going to demonstrate this to you on the charts, and you'll understand in a very, very short episode that we cover that there are much more simple ways, and you do not need to trade like a bank. If anyone in here thinks that they can, please let me know in the chat. The reality is you can't, and I'll tell you why. Banks don't make money in the same way that you're trying to make money. A lot of the times they're trying to move money, so it's not the same thing. So for you to compare that and think I'm going to trade like them, it logically doesn't even make sense. And the other side of it is you don't have the same money, so you don't have the same volume. You can't move the market how they can move the market. If you're coming from a position of this methodology that you believe that this is exactly how the banks trade, listen, you can dive into that all you want, but the stats have not changed. So you got to think about it like this. For the last couple of years, if everybody's institutional and everybody knows how to trade like the banks, then why are funding stats getting worse? Can anyone answer that question? Why does no one talk about that, yet they still are under this impression that they believe that they can? And this is the level of delusion that people get into. At the end of the day, I know you're not making money doing that. I know for a fact the 2-pip stop gang are not making money, because otherwise the funding firms wouldn't be displaying these type of things. Now, you might be someone who's sitting there thinking, well, you know what, I know someone who does trade with a 2-pip stop and they get paid out. Fine, and there probably is. Again, you're going off of anomalies. This is not my opinion. These are the largest funding firms telling you this, and you choose to ignore it. And this is the reality that we've come to. I don't know why, but this is the situation that we're in. Why would you take those odds? If someone said to you, bearing in mind there's under a 1% chance you're going to be paid out, would you take those odds? If someone said, cross this lake, I'm not going to tell you what's in it, but cross this lake and there's under a 1% chance that you're going to make it out alive, would you take those odds? You probably wouldn't, yet you still take those odds with these stupid little small stop losses and wondering why you still haven't been able to scale up. I do not care about anomalies. Just because a small percentage of people have been able to do it doesn't mean that the majority should. And that's where you get misled. And I'm going to explain to you how you can still benefit from the perspective of wanting to know where the banks position their money. I'm not against that ideology. I agree with people that want to trade like that. I understand from that perspective that, of course, why wouldn't I want to be on the side of when the bigger players and the money's coming into the market? But the funny thing is, we've always been doing that from day one anyway. It's just all these new fancy terms that have misled people into just a load of rubbish. Otherwise, you'd have multimillionaires. You got to look at the numbers. You got to look at the stats. The reason why our funding stats are so good isn't because we have the most complex system. Our system is very simple, but it's the mindset and the mentality and the rules and the discipline that we have that goes along with it is what produces the money, not the complexity of the strategy. You could forget about Falcon strategy and you can get the most basic strategy in the world, go support and resistance, and I don't know, John the carpenter, who's got a phenomenal mindset, will make more money than anyone with these complex algorithms and supply and demand and order blocks and you name it. I can assure you this, the person who knows barely anything but has a phenomenal mindset will be making more money than you with a fancy chart. So what do you actually want? Do you want a really glorified chart or do you want to make money? That's a question for you. I'm going to show you right now my interpretation of trading like the banks, or with the banks, should I say. So let's get into it. Welcome to this episode. So if we go to Aussie dollar, higher time frame here, and I really hope you learn something from this, because what you have to remember is that, look, this whole industry, they're very quick to throw shade towards Falcon. They're obsessed with it for some strange reason rather than focusing on themselves. So you might be thinking, okay, so Mark, why are you talking about trading like the banks and these systems? It's because people don't leave us alone. That's why. And I have to now address this because people can't seem to focus on their own shit. So let me explain to you really, really simply. This is my interpretation. This will help you out. So if you take a look at Aussie dollar, we're on the higher time frame here, and we're going to start off with the daily. Think about it from a structural point of view first and ask yourself, where do you believe the bigger money that is being moved by the banks are positioned? Where do you think that is? So if we was to highlight, let's say, this run, do we believe from top to bottom, from this high to this low, do we believe that that has been moved from retail? Do we think this level of volume? We'll go weekly first so you can see from a candle point of view, especially that initial push. Do we believe, and this is a question for you guys, do we believe that is retail? Do we believe that that's retail? Because my question is for you is, when you're looking at a chart like this and you've got supply, demand, and you've got all these different things, it doesn't matter what you believe. If you think, oh, because people ask us all the time about patterns, you trade patterns. We trade patterns. We trade patterns from a holistic point of view. And what I mean by that is that we don't come from a position that the pattern is the catalyst. That's the difference. The catalyst is price action. The catalyst is what I'm about to show you. Break of highs, break of lows, where the real money comes into the market. The pattern is just a tool. It's just a guide that helps us articulate our entry criteria. But we're still looking at the same direction that you're probably looking at anyway if you are quote unquote institutional. So let's take a look at this. Exactly, it's not retail. So if we know that's not retail and we're breaking that structure, let's look at it back to the daily so you can see the flow of how simple this is. So what do we have? We've got sharp move down, sharp move up, price comes back into this area, right? So we tap back into this area, and then price left a footprint, which I'm going to zoom into. So price left a footprint right here. So conveniently, this sharp move, which we refer to as a hook point, price comes back into that, we tap into that region, we push down, we form a continuation, and then we break this low. Now when we break this low, what happens next? I'm actually going to remove this next part to make it even more simple. When we get a break of this structure, I'll use the arrow to demonstrate. We've now broken that low. What's happened? The market has left a footprint right here. Very intentional when you see a sharp move up. What does price do? We sell off and we create a clear gap between the origin of the move. Where is the origin of the move? The origin of the move is right here, which is a simple continuation. So we get our move up, impulse, correction, continuation. Simple Falcon 101. What does price do? We then deliver all the way to this area, we sell off, and you can see there is a clear gap where price has pushed towards that area. Now this clear gap right here will get filled. Now, when this gap gets filled, what do we need to see? We'll probably see a continuation pattern that will cause that to be filled. And what do we see? We get our typical larger 3-touch structure. So we've got our 1, 2, 3. It's actually a Falcon flag here, just as a little tip there, which that's the clue right there. So we get our Falcon flag that then sells off into this low. Now, what's interesting about the sell-off into this low, before I get to the bit at the top, notice how that we actually, it's very small, but we have a gap. So you can see that this is not a clear break of structure. This is just, it taps into it very, very slightly. It's a few pips or so, but you can see there is a gap. What does price do? It moves up correctively. It comes back down. It creates a double bottom. But remember, double bottoms don't exist anymore. They don't work apparently. So we have a double bottom and then we move away. And when we move away, what do we tap into? We tap into the gap that was left from here to the original footprint, and we wick towards it. So now when you understand the picture as to, okay, so this 1, 2, 3, we sold off, tiny gap, we move around, we arc round, we create the double bottom. This is the origin of the move. We then move up to fill this gap right here. This gap right here gets filled. Why does it get filled? The original footprint was outside of all of this volume in the first place. So when price fills that area, what a coincidence that price has tapped into this area and then we sell off. So then my next question again, if I go back to the weekly chart, and hopefully you're following along here, who has moved this move? From where we are tapping into there, down into that low, who moved that? Is that retail or is that institutional? So my question is for you guys, that if this is institutional and retail is always on the wrong side, and retail patterns like continuation patterns are on the wrong side, who's on the wrong side? I'm confused, right? Because this is a retail pattern and this is institutional, but I think we can all agree this move, this direct move down that sold off into that low, which was the origin of the move there, that's not retail, right? That's institution. But retail patterns don't work, but it's a retail pattern. So who's on the wrong side exactly? This is where people are very, very confused when they say these things. They just say retail's on the wrong side of the market, but without actually understanding what the fuck they're talking about. And when you look here, price is actually very, very simple. We have a gap. This is where people will get confused. They think that we trade just a 3-touch pattern anywhere without any context. We're looking at this footprint, which is very deliberate to that gap. We tap into that, we sell off, and we take advantage of the run. Are you guys with me so far? Exactly that. It copies and pastes itself. There you go, right? So if you actually look further, I didn't want to go too granular with it, but you just have it here anyway, right? So we'll just mark it on as a zone if you like. What have we got there? Right, so price breaks this low. We break the low, but look at the sharp move. And the sharp move, as you can see if I just zoom in there, look, sharp move up, sharp move down, we come back up, we reject the same area, we then sell off. What do we do again? Copy and paste system. Footprint. I'm giving you so much here, right? And even within this episode, you could learn a lot. However, there's still more for you to understand in the moment. But as you can see here, look at price, how everything is so deliberate. If I just show you this low, what have we got? We've got a gap at this low, haven't we? What happens? Price moves up, creates a footprint. Then what happens? We sell off correctively. We come back up. We tap back into this area, which it was really sharp. Because in these areas where they're really sharp, what you have to understand is a quick tip here. When it's really sharp like that, that's where there's usually a lot of volume, right? So when I say we're trading this channel as a 1, 2, 3, people are confused because they think what we are trading is patterns. No, we're using it to identify our entry, but it's not the catalyst. The catalyst is when the bigger money steps into the market and we identify that. And then we take advantage of that run. So the goal, if you want to trade like a bank per se, is that your goal should be, how can I surf the wave? How can I ride the wave when the real money steps in? Now, I've spoken to institutional traders that have been trading on these floors for 20 years, 30 years. So I understand how it works in the back end. And I've had in-depth conversations with these people one-to-one. And the reality is the best thing that you can do is when the train has left the station that you're on the train. You might not get in with the exact precision. You might not get in with the same exact entry. And then sometimes there's entries that you can't even see on your chart. So that's like a rabbit hole within itself. However, working with what you've got, your best bet is always to surf the wave. Once the wave starts happening, you take advantage of that. And that's what Falcon has been doing for 101. So for anyone who wants to learn how we trade the markets and you want to learn more in depth as to how we then execute on our entries, make sure you check the links in the description. You want to get involved in the next 3 months. There's going to be a lot of volatility in the markets. There's so much for you to learn and capitalize on. And if you're not involved, I promise you, there's a time and a place when you're going to miss out. And I very rarely say that, but next 3 months, if you're not involved, you're missing out, hands down. And this week, we've already seen that momentum step into the market. It's been ridiculous. Caught Kiwi Yen for 5.5. That was about 50% on the table all across the board. It was just crazy. However, going back to the same thing, right? Then what do we have? Same deal. So if I go down to the 4-hour chart, what have we got? Footprint in the market, right? We've got that gap right here. We formulate in the form of a larger structure. We tap above. This expanding here, this is what we've got to be wary of, because we had our original footprint and we've got a gap there. So there's a chance, yes, we can come down and we may come back up to fill that gap in the form of another structure before we actually sell off itself. But you can see like clockwork. There's the footprint, price comes back up, we push down, continuation. So again, continuation pattern is a retail pattern, right? But apparently that doesn't work. How does it not work? I can show you it works. Over 30 years. People are deluded. Right? Do not get fooled into this mindset when people are telling you that they've got something that other people haven't. The problem that I have with this whole trading like a bank, like I said originally, I don't care how people trade. We never have. All your goal should be is to have a simple trading system that you can execute that is as mechanical as possible, right? So you don't want to have it 100% because you're not a robot and that will fail eventually. You have to have a bit of human emotion in there and experience. But fundamentally, your mindset is going to take you the distance, not your technical picture. And the problem I have with this whole trading like a bank is this elitist mindset that you believe that you have something that others don't. And I think that's a slippery slope for arrogance, ego, that will just trip you up in the end anyway. And I've seen it. I know many traders that have tried to do that. Why is it? Take a look at the trend, right? This is your easiest clue. Why is it that people with very small stop losses, with like 2-3 pips, are now moving towards 10 pips, 12 pips, 15 pips? Why do you think that is happening? It's happening because people have realized that this is unsustainable. But at the time, when we've been saying this for a long time, probably not a good idea to be putting, 10k a position on a 2-pip stop. Yeah, but I can find this broker and it's got these spreads. Who gives a fuck? Why are you putting 10k a position on a 2-pip stop loss? Because you're not, and you're definitely not taking 5 losses in a row before you do that as well. So I already know by default you're not trading with a lot of money. And it's fooled people for so long, it's ridiculous. And people that were doing that are now gone, oh no, now I only take a 7-pip stop, 8-pip, 10-pip stop. So you're just doing the full circle back to where you know intuitively makes sense. Because if someone said to you, put a 20k position down, right? So you're trading a £2 million account, risking 1%. If someone said, I want you to place 20k per position, here's a £2 million account, are you going to go and put that on with a 2-pip stop loss? Are you really going to do that? And are you going to take maybe a couple of losses in a row before it plays out? So you're comfortable with it being 40k in drawdown and you're going to be like, oh yeah, it's just probabilities. Are you going to do that? No. So you intuitively already know instinctively that it feels wrong and something's not right. So why are you doing it on £1,000 anyway, thinking that you're smart? Just because you caught a few trades here and there and maybe you passed a funded challenge, well, guess what? You'll lose it next week anyway because we already know the stats. So if you're really serious now for the next 6 months, you want to get in your head in the game, get around the right people, do something that's sustainable. It doesn't need to be just Falcon. I don't care if you are trading a version of some institutional method that you think that you have, at least go wider stop loss. Please, at least go wider stop loss. Do not give in to greed and try and make the most amount of money. And do not be stuck to the charts all day, every day, because there's more margin for error as well. I'll take some questions. %, Luke, looking absolutely prime. That's what happens when the banks place billions of orders, not enough trades to take on the other side. They create a hook point to draw in the traders to fit. Of course, right? Simple mechanics behind the chart, right? So even when we look at, I'll give you an example on euro dollar, right? So this was, I mean, euro dollar long temporary for next week. There was a trade in here. Let's go on to the 1 hour. So there was a trade, oh, in here, right? Right, so if you see this structure, right, this is where, like, if you don't know about Falcon or you think you know what Falcon is, this might help you out. So someone who doesn't know about Falcon will believe that maybe we'll trade this sell here, right? We wouldn't trade this sell. There's a reason for that. I won't go into too much detail, but there'll be a reason for that. You've got this consolidation just above, which is sat outside of this previous channel, as you can see here, right? So price comes up, it creates a lot of volume. We then tap into that, we pop down, there's a continuation, there's the trade. Now what was interesting, and it was quite a little while ago, there was someone that was telling me that they trade like a bank, and they were saying, right, retail is always on the wrong side, I'm short on euro dollar, and they're doing the opposite. And what was interesting is that we was looking for this sell at the same time they was looking for a sell. So I'm confused. If you're institutional and you're short EU, and I'm retail and I'm on the wrong side and I'm also short in EU, who the fuck is on the wrong side exactly? Because now I'm even more confused. I'm like, what? Makes no sense. So this is when it gets very, I think they're confused as well. So again, going back to it, keep it simple. Stop getting into this elitist mindset that you think you know more than others, because again, that within itself is probably the same arrogance of why you're still not scaled up in your funding. And it's as simple as that. And remember, anomalies are not how you should make your judgments. Exceptions do not define the rule. So if you say, Mark, but I know someone that's done that, and I know actually 4 people, it doesn't matter, it's not enough. You got to look at larger sample size. Do the majority of people make money that way? Because guess what? I bet you I could find someone who does a 1 pip stop and happens to be trading $500,000, for example. And it's just a hyper niche, small percentage of person that's found a way to make it happen. But for the average trader, that's not how you're going to make a long-term standing profit. It's not how you're going to build a long-term career. So stop focusing on these like really niche things that most people will never actually sustain in the first place. That's my message, and it's the true message. And if people have a problem with that message, then that's their issue. I don't care. I know this is within the best interest of a trader to trade for the long term, regardless, even if you trade our strategy. I don't care about that. It's the concept of how are you going to build a long-term trading career. You're not going to do it on 2 pip stops. You'll change, I promise. The industry's already changed itself. That should be enough proof to tell you that. This weekend forecast is going to be, oh, I can promise you that. There's my watch list is cooking up. It's looking juicy. I'm very, very happy. There's no anger. There is an element of frustration to a degree, but for the position of wanting people to be able to see through the light. You got to understand, when you're in my position and you get hundreds of messages every day, imagine this, you get hundreds of messages every day and people sending you similar messages of, oh, I've taken 15 funded accounts, I've been trying to get in with tight pips, I'm £5,000 down, what do you think I should do? I'm thinking about getting rewired, but I don't have the funds anymore. You know, when you hear that shit every single day for months and months and months, eventually I have to explain something as a duty of care as to these things could have been avoided. Like, who are you being guided by that you think this is a good idea? It's not. So that's why. So don't mistake my tenacity, right, for anger, because it's not. I have a duty. And when I see those messages every single day, I literally got about 6 of them today. Similar, it's not exact same message, but it's a similar narrative of, you know, I've lost 3-4K. I still haven't had a funded payout. It's the same stuff over and over again without fundamentally fixing the root. Like, if you would fix your mindset in the first place, you actually put yourself in a position to succeed, right? If you would actually deal with the root, you will literally make money for the rest of your trading career if you knew how to dial in your mindset. That's the key. And I don't want to see people, regardless of how they trade, I don't want to see people take 15 funded assessments before they win. That's not a good idea. Now I clearly have a little insight regarding price action. Usually leaves the footprint to go back to accumulate that volume to a good, yes. Yeah, on the higher time frame, and there's lots of other stuff on the lower time frame as well. But again, my goal here is not to explain to you the Falcon strategy. If you want to learn about how we trade thoroughly, our advanced techniques, then of course that is for the Falcon members. This is merely the concept. Is that I'm not going to answer any more question on my IG lives about like how you can trade like the bank, and hopefully that's cleared things up so you can understand is that we're actually in agreement. It's just that all we see it as is, all we care about is identifying, okay, so where did the bigger players step in? Where are the banks stepping in? And can we ride that wave? Can we ride that wave? Can we ride this wave? Can we ride this wave? Can we ride this wave? That's all we're doing. We're just surfing that wave. So we're in agreement. It's just the ideology behind thinking that you have something special that others don't. There are people with far more simple strategies even than how we trade, and they're still making a lot of money. It's not about the strategy. The strategy is one component. You're still the executor. You still have to trade under pressure. You still have to trade, and your belief system is going to dictate that. That's just the truth. Exactly. Just blindly taking assessment after assessment is not good advice. But what's on the cards for this quarter for you guys? What is on the cards for this quarter? Last quarter was huge for me psychologically. I like to hear that. Lots of breakthroughs. This quarter, we're gonna hit so many people from a funding point of view. They're gonna level up so much because we've got such a vast amount of traders that are on things like the brink of six figures. People have already hit their $250,000. There's quite a few traders that are like just on the brink of $500,000. So as you can imagine, with a quarter like what we're about to step into, where there's a lot of volatility, a lot of momentum, you're going to see some traders tap into some serious levels. And that is all I'm focused on. No external noise. All I care about for this next quarter is making sure our in-house fund, we're just going up, 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 and up. And we're delivering the best possible education from how we trade, how our know-how, our experience, to make sure those traders just level up. That's it. So then at the end of Q3, we've now got so many more traders that have hit their funding goals, but they're actually not just hitting funding goals, they're sustaining their capital. That's our ultimate goal. And because we are tunnel vision and we focus on ourselves, that's why we'll keep producing results. And I'm very, very proud of where the community is heading. And now it's just, I've just got that aggression of full steam ahead. I'm so pumped for it. The second half of the year we're going to be flying. Yeah, we have the Beyond Rewired meetup as well on the 21st. So if you're a Rewired member, you're going to gain access to that, and that's going to be in London. Can't wait for it. First ever official meetup. As you know, the price of Rewired is increasing, so you want to secure that before the 20th. And remember, when you're securing that, you're securing it for life, right? So you're going to have a lifetime membership of that. You're not going to be able to, you're not going to have to pay anything more after. You'll have that fully secured, and you'll have access to Beyond Rewired when it comes out. So you'll be grandfathered in. So those that are in Rewired already, they're fortunate that they've got that. And anybody after that, it's going to be north of 2,000. So if you've been gathering funds and you've been thinking about getting involved, the amount that Rewired will save you in the future pays for itself within itself, let alone all of the other things that come with it, the community, the support, the mindset, the amount of things that you're going to be able to progress in your life, that's there. So for those of you that are serious about trading, rather than wasting money in funded assessments, you can literally secure it now. So that's what I would be doing. I wouldn't be wasting my money on funded assessments when there's under a 1% chance of being paid out. It's not really the odds that you want to take. Now, they might improve a little bit just because there's, new rules of no time limits and stuff like that. But again, you're still going to have to address your mindset. And most people, they're not mentally equipped to be profitable traders, which is why the stats are the way that they are. So the reason why we put so much emphasis on psychology, it's not to devalue technicals, because I believe you still need to be a master of the charts. You still need to be a wizard on the charts. I'm not saying don't be competent on the charts. I love the charts. I live and breathe it. However, your mindset is what takes you the distance. It's what makes you the vast amount of money. Otherwise, you'd have all of the technical traders, they'd be millionaires, but they're not. Why is that? Is because the missing ingredient is they don't know how to think like a profitable trader. They can just take profitable trades here and there, which is why they do the yo-yo dance. I'm sure you don't want to be in that position for years and years to come. That's so draining. Oh, this quarter, we are leveling up, believe you me. So I am pumped for it. But guys, I wanted to show you that. Hopefully that's answered a lot of your questions. Thank you so much for tuning into the live, of course. Leave some comments below, your thoughts. Has this given you anything to think about? Is there any type of content that you would like to see more? Of course, when those of you ask for analysis and how to break down our entire strategy, of course, that's in the membership. So please do respect that. And we're always here to give as much value as possible. For those of you that have been following the channel for years and years, I mean, we've consistently brought value to the channel, and there's so much that you can learn even from our older videos that still have value there. But one word of advice moving into this next quarter, if there was ever a time for you to get involved, it would be now, because we're going to have explosive price action. We've already started to see it this week already, and at that half year point, when there's a lot of money being moved around in the world, we're naturally going to have price fluctuations, and you need the experience, otherwise you'll miss out. It's as simple as that. So I'm keen to get into the technicals. This week's SMB is going to be absolute pure fire, so I'm buzzing for that. But apart from that, guys, enjoy the rest of your evening, your weekend. Thank you so much for taking the time to join me on the live, and I'll be catching you in the next episode. Take care, everyone. Let's smash this quarter.